What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button and that notification bell so you're notified when we release new videos. We release videos Monday through Thursday and once on the weekend. So for today's agenda, we're going to get into a recap of today's price action and QQQ Internals. We'll do a quick wide view of the price action for SOXL from the week, month, quarter, and year time frames, and then we'll set our 4-hour markers and our triggers and targets for tomorrow, and we'll review the triggers and targets for the week, the month, the quarter, and the year. So just getting into the charts, we'll look at today's intraday price action first, like we said in the agenda. We did get the open here at 30.33, so a bit of a gap up from the previous high of day at 30.03. But with that, we wanted to wait for some type of either higher low above opening print or lower high below or at opening print to enter into puts or calls, right? Higher lows above opening print, we would get into calls. Lower highs below opening print, we would get into puts. So we can see here on the 5-minute time frame, we did get a lower high, but it was actually, this wasn't a lower high. This was just a 3. I'm sorry. But we did get the lower high here. It was right at opening print. You could say below it because it did close below it. But then when we got the 2 down, that would be the trigger to enter into puts. You did get a higher low here, but it was not followed up by a higher high. So it did not reverse trend. So when you enter the puts here, you set your stop just at or above the previous lower high, or the lower high, and even if you get the higher low to begin your trade, as long as it doesn't go higher high, then you don't stop out, right? So stops right here. You do get a lower high eventually, and we start to push down. You stay in the trade with the lower high here, stay in the trade with the lower high here. You do get the bounce off of overnight low, right? So you could have started to scale out at previous high a day. Again, that's going to be our first target with the 4-hour markers that we have on the board here. So the 4-hour markers that are in play right now are the opening print, the overnight high, previous high a day, and overnight low. So you're obviously not going to take profit here at overnight high, even though it is the first target. It's just more of a confirmation that once you get a price action below that overnight high, you're probably going to see the previous high of day. So it would be perfectly reasonable to start to scale out once we hit previous low a day, and then let everything go, or maybe just leave a runner or two once you hit overnight low. When we're talking about intraday trading, a lot of times you like to, it's a good idea to exit at the target, right? You could always go further. That's why you might leave a runner or something like that. But once you've reached a secondary or third target, it's a good idea to unload a good portion of that, unless you're just seeing a major push down in all the internals, and if it's just going to be a trending red day. But in this case, we didn't know that, right? Because we had a gap up, and all that we're really presuming is that we're going to get the gap fill and then reversal with the higher low on a higher time frame, right? So once we did finally get the higher low, higher high combo to reverse the trend, right, we would stop out here. And then it's perfectly reasonable to switch to calls at this point. Although we are below opening print, right, there wouldn't be an intraday trade that I would necessarily be looking for, because it could take time to go back up, right? A lot of times it stairs up, elevator down. So, at this point I would grab calls. I wouldn't grab anything that expires this week. Just from my preference, I would grab something for like next week. That way you're still getting good delta to theta ratio, high enough delta, and keeping your premium somewhat low so you can enter multiple contracts, and you can start to scale out at maybe overnight high or opening print to take a little bit of profit, and then you can start to swing overnight. Because if we do look at if we just switch to the 15-minute real quick, right, we get here's that push down we had today, but this low, once we put in this high right here to lock this in as a low, right? This 2 up locks this 2 down in as a low, right? We could go up and make a higher low, or we could go up and make a lower high and push down and make a lower low. But regardless, this is a low in the trend in terms of the trend. So this is the low, but it's a higher low from this low down here. So from a 15-minute perspective, you just made a higher low here. So it's perfectly reasonable to enter calls. Again, intraday, if you feel like it, but we are below opening print, so I feel more comfortable buying, intraday calls for next week, even if I am going to sell them today. It just gives you a little bit more flexibility. You don't have to, get the direction going in the right direction immediately like you would if we were buying a weekly. And it is still early in the week that your theta decay wouldn't be too bad, but it would be quicker than a call for next week. So you enter calls there, and of course you get the higher low here, right? Here's a low, here's your higher low, and we're pushing up. We're getting a higher high from this high as well. So it's switched trend from the 15-minute to back to up. And if we look on the 1 hour, we can see again this is just a higher low in the sequence of the trend. So we're pushing back up. We haven't quite made a higher high here. This high was 30.64. Oh, we did actually, so 30.65. So just barely made a higher high there. So we've continuing the trend to the upward direction on the 1 hour. The one thing I will say is the 4 hour. We didn't get that higher low here today, but it's not that big of a deal. We don't need to make the higher low on the 1 and the 4 hour. We can just continue to push up towards this weekly broadening formation, this purple line, this hourly broadening formation here in the market maker's expected high. We've also got a daily broadening formation here. If you're not familiar with the 4 hour markers or the colors for the different lines that we have on the charts, make sure you visit our bonus content section where it shows how we break down a chart and label a chart. So there's a charting basics and a precision trading guide. The precision trading goes a little bit more in depth from the scalping day trade perspective, but both are great videos. So go ahead and give those a watch if you're not familiar and need a little bit of help following along. But let's just continue on here. So we've looked at the intraday pretty much. We got the higher low on the 15 and the 1 hour. We've continued to push up, got the higher high in both the 15 and the 1 hour. So the trend is up. We do want to keep in mind the Fed FOMC rate decision is tomorrow. So it could all come tumbling down, depending on what the decision is. So just keep that in mind. It doesn't have to continue to go up. Like I said, on the 4 hour, we didn't make that higher low. So could the rate decision cause us to put in a higher low on the 4 hour, possibly, or maybe even a lower low, depending on how the market reacts. So we'll when we get our triggers and targets ready here, we'll be ready for both directions. Just something to keep in mind, right? So that's the intraday. Let's look at just from the day chart perspective. And let's get the. So again, we're still in this, somewhat in this range, right? We're popping out of it, right? Here was our extreme high of the 11-12 week range, and we've popped out of it. If we do get some pullback, looking for a higher low, here or at least above this level here, we're looking for that higher low. If we don't get the higher low, then we're gonna run the chance of pulling back down to that 24 level at the bottom of the range that we've been in for the last 11-12 weeks. So we do want to see, let's see, 28.79. If we go below 28.79 on the day chart, we're making a lower low. Now that doesn't necessarily change the trend to down because we are coming from a higher high. What it does, it would create a broadening formation, right? So if say we get a horrible rate decision tomorrow, and we go 2 down on the day, meaning we go below yesterday's low, this just creates a daily broadening formation. And then, say we come down and bounce off the top of this gap and then start to go back up again. That just creates, the bottom part of the broadening formation. Then we know price is going to be somewhere within, these levels for this, near future until there's some other type of event or earnings report or something like that would push us above those broadening formations. So we don't have that yet. Again, we're not in the business of predicting, but we're just kind of just showing what could happen ahead, right? So we're above the range, the 11-12 week range that we've been in, continuing to try and push to this market maker's expected move high of 31.85. If you're not familiar with the market maker's expected move, make sure you check out our weekend video where we go into detail about where we get that number from and how we chart it on our charts. That does kind of coincide with this grouping of 2 daily and 1 weekly broadening formation. So Although we are continuing to push higher and continuing the uptrend with the higher lows, higher highs, we could see resistance around this 31.85 level, not just because it's the market maker's expected move high, or not just because of a broadening formation, but because we have a confluence of all of these. So, just something to keep in mind. That doesn't mean we have to stop here and reverse back down. It could just mean a little bit of sideways action before we continue to move up. And then again, based off the rate decision, we could just power straight on through it. So if we don't get some violent action up or down, and we're just kind of continuing to chug higher slowly, then that's really where you want to keep that this level in mind. If we pop up or we just slam down, then it's not something we really need to think about. But just that slow grind up that we've been kind of doing here intraday, if we do that again, just kind of keep that level in mind. Again, out of the range, could go back to the downside, but right now there's no signs of it yet. So let's move on to the week, and oops, that's not the week. There we go. So again, we have gone 2 up on the week, continuing the break of this lower high line, downtrend line that we had from a couple weeks ago, right? So continuing to break out. We did get the higher low here. So although, let's make this a little bigger. Actually, let's take these off of here. There we go. So if we look here, this is, although this, this is a lower high, from this high to this high is a lower high, but this low to this low is a higher low. So we're getting that consolidation. Looks to be breaking out of consolidation here. But again, we have to contend with this weekly broadening formation was established at the beginning of the 11-12 week range that we were in. So again, we could slow down there, we could reverse, but if we get a big pop from the rate decision tomorrow, we could just explode on through, and then we're looking at trying to maybe fill this gap, or at the very least from the week perspective, making a higher high according to this high, or a higher high according to this high, right? So we could come up here and set a higher high either here or here, and then come back down and maybe make a higher low if we're going to continue the uptrend, or just that would be the high point. If we're not going to continue any higher, right, then we could get the push down. So just keep those levels in mind. There's not really any major fibs or broadening formations or downtrend lines right here, but it's significant when you make a higher high on a weekly time frame or a monthly time frame, or one of the larger, really any time frame. Once you make a higher high, there is cause for some people to sell, to take some profit or whatever, but those are inflection points that you want to keep in mind. Looking at the month perspective, let's move this along. Going kind of slow today, coming back from vacation, so I'm just trying to get back in the groove. But we do have the 3-2 up on the week. Doesn't look like we're going to get any type of reversal on the week perspective, unless the rate decision or the second half of the week is just bad, right? We could, if it's bad, we get the pull back down into the body of last week's candle. Especially if we get down there, then we're looking at possible 3-2 up, 2 down on the board for the following week, next week. Not a lot of magnitude there, so it wouldn't worry me too much even if we did close this gap right here. I think we've got enough support that we could bounce back up. The range that we've been in for the last 12 weeks, it's kind of the extreme, but it could be a look below and fail just to come back into the range. But right now everything's looking bullish. We're 2 up in force, meaning the current price is above last week's high, so we're in force with the 2 up. Everything's looking good there. Quarter still looking good here, right? In force with the 2 down, 2 up. We're still targeting the high of the candle to the left of the 2 down, so that high is 36.15, which is that second higher high on the week perspective that we were looking at on the week chart. So again, from the quarter, everything looks good. And from the year, even though we did trigger that 1-2 up, 2 down, it did pretty much get to magnitude, but more importantly, we were able to flip the year back green. There we go, Thinkorswim. So in the past 11-12 weeks, that 28-13, the year flipped, that would flip the year back green. That had been the resistance of that 11-12 week range that usually pushes us back to the 24 level. But right now, looks like we have defeated that. We've got to stay above it, but if we can continue to push up, especially if we continue to push up through the rest of the year, finish a green hammer that puts us in a great position for a 2 down, 2 up next year, which would target the high of the candle of the 2024 candle, which was at 70.08 level. So, pushing us back, not to all-time highs, but getting close, at least the magnitude for that move would get us close to the all-time high. So everything's looking good from a bullish perspective if you're a bull. Again, rate decision tomorrow, so that could, really put a wrench in the bulls in their plan if the decision is not what the market would desire. So we just want to keep in mind that we are out of the range right now, but we're still really close to it. It could be really easy to just bring it back in. Again, this is just a weekly broadening formation. It could just have been broadening over the last few weeks to get us back up here, and we just push back down to broaden it down to the downside, right? Let's go ahead and look at the QQQ internals just to from an intraday perspective. Again, we opened up at this 30.33 level. Intraday, the take was basically just traveling along the zero line, 80 QD. Although it did go negative, it wasn't too far negative, close to that zero line, nowhere close to trend lower zone. And the vol QD, there was money coming in, but it was nowhere close to the trend higher zone. So you can see the morning, obviously the internals were down, and that's why we had the downward action. We did get somewhat muted internals. Chips were really leading tech, right? They were kind of pulling QQQ up with it. So you can see how Chips was kind of leading the QQQ internals here. But the QQQ internals did continue to move up as SOXL did, so giving us a little bit more confidence. Again, not making any trades off of the internals alone, but we just like to keep those in mind. Another tool in your tool chest, right? So let's look at the notes for today, right? We've got Wednesday, September 17th will be tomorrow. Today is the 16th, so that's where our notes are coming from. Tomorrow, there will be 71 trading days left in 2025. Today's close price was 30.48, and we can see here what it would take to flip the week, the month, the quarter, and the year red, right? We've got our market makers expected move for the week, which is that $2.55 move, giving us a range of 31.85 and 26.75. We know what our gaps above and gaps below are. And then for our triggers and targets, we know what the intradays what the intradays are, right? You're just using the opening print, overnight high, overnight low, previous high day, and previous low a day. So if we just look at this, let's go to like a 5-minute chart, right? We know that here's our previous high a day, say overnight high is up here, overnight low is here, previous low a day. If we get an open, say here for, oh, come on now. Come on, Chris. All right, so if we get an open, let's get the right tool out. If we get an open here, right, this is pretty opening print. If we get some type of upward movement, a pullback, and a higher low here, we would enter calls, first targeting previous high day, and then overnight high. That's just from a scalping perspective. If we were to open here, get a push down, we get a push back up, and a lower high underneath opening print, then we're going to target overnight low and previous low a day. Another good target would be the 4-hour trigger to the downside is another point of inflection. It's the low of the second 4-hour candle from today. So, if price didn't go below that level in the second 4-hour, this is somewhat of a significant level from an intraday perspective that price could slow down here, if not reverse. So we've seen plenty of times in the past where we do get the lower high underneath opening print, and it pushes down just to the 4-hour trigger to the downside, and then pushes back up, and then we end up with the green day. So first target could be here, but ultimately you would look for the overnight low and previous low a day. All right, so that's from a scalping perspective. Let's remove that, and let's just go back to our 4-hour chart from a more of a day trade perspective, and there we go. From a day trade perspective, swing perspective, like overnight swing, we're looking at today we had a 2 up, 2 up. So if we were to go to the downside, if price goes below the second 4-hour candle from today, that's 30.08, we would first target the low of the candle to the left of this, right? So that's the 29.79, and then we would target this the low of this candle, which coincides with last month's high, which is this 29.66, and last week's high, which is this 29.61, right? And then if we look into the upside, we don't have a reversal, so we have an entry, but we don't have a clear target. Like with the reversal, if we went 2 up, 2 down, that's a reversal. So the entry is here, exit is here. With a continuation, we have entry here, so price goes above yesterday, the second 4-hour candle from today. Then we want to enter calls, and we're targeting price action that we've talked about in the past, right? So let's go to our notes. And again, from the downside, if we go below 30.08, we're targeting, or the magnitude would be 29.79 with extended targets of 29.63 and 29.14. If we go to the upside, that's a 2 up, 2 up. So it's not a reversal. It doesn't have a magnitude. It just has a trigger and a targets. So trigger would be 30.65 and target is 31.14 and 31.77. One thing that I will bring up, let me go ahead and just bring up. Let's go to the month. You see where today we rejected was around that 30.55 level. And if we look at what that 30.55 level is, if you're not familiar with this channel, if you are familiar, this is probably ingrained in your head, but the 61.8 fib of the 2020 low to the all-time high is 30.55. And we rejected off of that this morning, right? So we want to keep in mind that level from an intraday perspective. If it is something that, gets us over it, I would think that it would be some type of, good news, because that is a pretty big level to overcome, right? So we may peak above it and then pull back below it, or get sideways action at it. But to just kind of disregard it, we would have to have some type of, in my opinion, some type of news, earnings, or some technology breakthrough or something like that. Or like tomorrow we have FOMC rate decision, so that could just put us over that 30.55 and put it behind us, no longer think about it unless it's going to be support. But if we have any type of sideways action, that wouldn't be surprising, because this is a very major level. All right, so let's look at the day chart. So again, day trades, overnight swings. We got the 2 up. We're continuing this uptrend, but if we do get action, price action below today's low, we're looking at a 2 up, 2 down, triggering at the low of today and targeting the low of Monday, right? So the low here is 29.79, which happens to be the magnitude of the 4-hour move to the downside, right? See how those domino into each other. And so we would enter at 29.79 and look to exit at 28.92. We can have an extended target here of the higher low, because again, that's a significant level. If we go below that, we're making a lower low, and we're just broadening the formation from a day perspective. So that 28.79 is that extended target. So we can see here, did I say 28.79? Yeah. Why don't I have that? I have 28.70. I must have fat fingered. All right, there we go. So we've got 29.79 as the trigger. The magnitude is 28.92 with the extended target of 28.79, 28.29, and 28.13. The way we came up with those is we just looked at this move here from this perspective. Let's go ahead and bring out the. So if we look at the base, come on now, the base here up to the high to the pullback low, we can see we've got these extended targets 29, 28, 28.70, and 28.29, right? So those are our triggers and targets for the 4-hour and day time frame. Again, we've already talked about the scalp intraday trade targets and triggers being the 4-hour markers that we have: the opening print, overnight high, previous high a day, overnight low, and previous low a day. But from the week perspective, again, we've already triggered the 2 up, 2 up. We hit the 30.55 target, so we can really cross that out. All right, so further targets are 32.64, 33.33, and 34.42 to the upside. If we do pull a red 3 or a bearish engulfer, that would trigger at 26.57, and we would target 23.80, 22.57, 21.98, and 21.18. All right. So again, we're in force with the 2 up, 2 up. We are also in force with the 3 down, 2 up on the month. So that triggered at 29.66. Again, we already hit this first target of 30.55. So let's go ahead and cross that out. And we've got extended targets of 31.44. I'm sorry, 31.41, 32.64. Oops, go ahead and add this one as well, since we met the first target. Right, and then again, from the quarter perspective, we've gone 2 down, 2 up. We're still in force. That triggered at 25.84 we're looking for 36.15. So still a ways to go on the quarter. It doesn't have to happen this quarter. It can still happen next quarter. That's just what the magnitude of the move would bring us to. And then again, on the year, we triggered the 1, 2 up, 2 down. It's no longer in force. We didn't quite reach magnitude, but obviously the year is green again. We're starting to form a hammer, and it doesn't look like we're going to really hit the magnitude at 621 unless something crazy happens. So there's your triggers and targets for the day, the week, the month, the quarter, the year. I hope I've gone through everything thoroughly for everyone. I hope that trying to just get back in the groove after being on vacation. So I just hope everybody enjoys the video and gets some good value out of it. I hope this morning's kind of scramble video that I put together didn't get into late last night, so I didn't get to put together a video last night. I put one together pretty quickly this morning. So if you did catch it, I hope it was helpful. If you didn't, that's another reason to turn those notifications on. You'd have been notified this morning. So. Again, hope everybody liked this. If you did, give it a thumbs up. Help the channel grow. We're not selling anything here. Everything's all free. Just trying to help as many people as we can discover SOXL if they don't already know about it. It's not a new ETF by any means. It's been around for a while, but a lot of people still don't know about it. So it gives that great package of high delta to low theta for a low premium, and a high beta on the underlying ETF, right? So it's a pretty good combination for little money and big profits, and that's what we're just trying to help spread, right? If you want more information about the strat, which is the base of our charting and trading method, you can find more information in the description. There's a free PDF, a link to a free PDF, as well as a link to Rob Smith's YouTube page. He's the inventor of the strat. Again, it's not a new strategy. It's been around for a while. There's a big strat community. I've been using it for years and years now. It's proven, it's repeatable, not just for SOXL, but for any ticker out there. So if you want more information on that, check the links in the description. And again, hope everyone has a good rest of their night. I hope you get a good rest, and hope you wake up refreshed for tomorrow's trading. And we'll see you out there.